A very warm welcome to all our HSBC clients who have joined us across the world. I am Deepa Thakkar. I am the SVP and manage the NRI products for HSBC in India. A very warm welcome to the Beyond Banking initiatives covering the liberalized remittance scheme. We understand that navigating the intricacies of international transactions can be complex. This session aims to empower you with the knowledge and insights to manage your LRS transactions effectively. I am delighted to introduce our esteemed speaker today, Surbi Marwa, a partner with EY. Surbi brings extensive experience and is a partner in tax practice. She has over 20 years of experience in the area of family succession planning, employee taxation and advisory, exchange control issues. Her focus area are HNIs and family businesses, and she will be guiding us through the nuances of LRS today. Our agenda for the webinar today will be we will explore the latest regulations governing LRS, including the current remittance limits and the permissible transactions under the scheme, gain clarity on the tax implications associated with the overseas income, investments, and properties held abroad, understand the essential documentation and procedures required to ensure compliance with the LRS regulations, separate fact from fiction regarding the repatriation of stock incentive plan proceeds under LRS, discover the convenient and secure modes and channels offered by HSBC to facilitate you on the LRS transactions. Without further ado, welcoming Surbi. Thank you, Surbi, for taking out time, and we can start now.
Thank you so much, Deepa. Thank you for having me. And just on a side note, I'm also an HSBC customer. So I've been getting a lot of emails about the webinar with you and me. So I think very well advertised, and I hope a lot of your customers are attending this as well.
Yes, and we already have a loads of questions which our customers have shared through our relationship managers.
Wow.
So without waiting, I will ask you. So we have audience across various scheme of things. There are some clients who do LRS regularly. There are some clients who are quite curious to understand the nuances. So if you can quickly, tell us what is liberalized remittance scheme?
So, Deepa, very good question. Just before we started this webinar, I was in a meeting and, it was extending. And I told the client, I said, I'm so sorry, I can't sit for another coffee because I have this webinar with HSBC. And I said, it's on LRS. I just said it very matter of factly, as if, it's a very normal thing for everyone to know. I know all bankers want everyone to know what LRS is, but she said, what's LRS? So I sent her, I said, okay, you need to have this link if you can join or maybe become an HSBC customer. But I did spend 2 minutes to tell her about it. And she said, oh, I've been, reading it in the papers and I used to wonder how people send money for college education, but thanks for telling me. So in a very simple manner, the LRS is the liberalized remittance scheme. It is a scheme available to all individuals who are residents of India. And resident here does not mean as per tax. Resident here means residency as per our FEMA or exchange control laws. So anyone who's a resident of India, and I'll talk about how you become a resident, is allowed to send 250,000 US dollars per fiscal year. So per April to March, which is our fiscal year, they can send this money overseas into a bank account or for the purpose of funding education or for portfolio investments overseas or for real estate overseas or for medical reasons, etc. And this limit also applies to minors. So in a family of four, wife, husband, and two children, they can effectively send $1 million every year, every fiscal year, under the liberalized remittance scheme. And this, in the last many years, sometimes this number, this amount of 250 has gone down, and it depends upon various political and other factors. But the 250 has been a set limit for the last many years. I do know, Deepa, from our last meeting, that the percentage of people who are sending money overseas and the amount of money that's been going overseas has really, really increased. And maybe you can talk about it. The other thing before I hand it over to you is, who is a resident as per FEMA? Now, all of us who've always been in India, which is majority of people who are watching this, are always residents as per FEMA. It's a very complex definition. I'll probably take the next 2 hours if I start explaining it. But in a nutshell, if you've always been in India, you're always going to be a resident under FEMA. If you have come for the purpose of employment to India, for example, if your organization has sent you here or you have taken up a job here, you're going to become a resident in the year you come in. Otherwise, there is, like income tax, there is also 182-day rule. So in the year that you're looking at, you have to go to the previous year. So if I'm looking at whether I will be a resident, should be as per FEMA, for 1st April 2023 to March 2024, I have to see whether I was 180 days or more in India for the year 22-23. So 1 year prior to that. But there are exceptions. So normally it's 182 days. But if you come for the purpose of employment, etc., then then you do become a resident under FEMA. So for all of you who've had cross-border movement, or whose children are coming and going, or who've come here for short jobs, it'll be good if you can connect with us to understand if you're a resident as per FEMA, because the limits, or this LRS, only applies to you if you are a resident. If you're a non-resident, of course, you can again send money overseas, but the limits and the way of repatriation are different. And I think I can see some questions around that, so I'll then address it at that time. So Deepa, back to you. Why don't you share some statistics on how the LRS has gone up?
Yes, thank you, Surbi, for explaining it in such simple words. I'm sure our clients who are going to be doing it for the first time will definitely get some clarity. And you rightly said that there is so much of interest now in LRS that there is a significant growth in this from last 2004 when the inception of LRS scheme started. For example, the data that we have states that in 2004 to 5 financial year, there was $7 billion of LRS which went outside India, which is now in 2022 has gone up to $19.6 billion, which is a 180% increase. This trend definitely indicates the growing interest among Indian residents to invest and spend some, time in learning about LRS. So the next question, Surbi, which I would request you to cover, is on what are the new taxation guidelines or regulations around LRS?
Okay, so this, there is the guidelines around taxation. There is a TCS on LRS. It was introduced a few years back only. It was not there earlier. Now, TCS is a tax collected at source. A lot of people say, what is this TDS? What is this TCS? What does this mean? Does TCS mean my money is just gone? No, it doesn't mean so. What TCS means is that every time you do an LRS, there will be a tax that is deducted, and the tax will be deducted by the authorized dealer, in this case, say HSBC. And the good thing is that it's not just a tax gone. When you are paying your advance taxes or when you're filing your return, you can adjust that. So, for example, if your total tax liability is 100 and this 5 rupee TCS has been deducted when you're doing LRS, you can adjust it and then pay the remaining balance of 95 as regular income tax. So it's not a tax gone. It's not that it's your numbers become short. It is, yes, of course, a working cash flow thing. And also the amount that goes into the overseas bank account is not full 100. It is 100 minus the TCS. Now, very interestingly, the TCS rate used to be 5% mostly. So there were different categories, but it was generally 5%. And in July, the government said we are increasing the TCS rate to 20%. And also things like credit cards, etc., will be brought into this limit of LRS and TCS. Then there was a circular in the middle of the year last year which said, as of now, we are restoring some of the provisions. Like, for example, we are not bringing in credit card, but the enhanced rates will apply, but from the 1st of October 2023. So if you are sending money overseas, and normally you send it for, say, let's say you're sending it for the purpose of education for your children. A lot of you must be doing so. So the TCS till 7 lakh rupees is nil. But since it's education, I'm pretty sure it'll be more than 7 lakh rupees. So now effective 1st October, also it is just 5% over 7 lakhs. So even before 1st October, the education part hasn't changed. It was 5% TCS till above 7 lakh rupees. It still is 5% TCS above 7 lakhs. Now let's assume you're sending LRS money for the purpose of investment. A lot of you would like to buy real estate. You want to send money overseas to invest in ETFs, etc. Now there, up to 7 lakh rupees, there's no TCS, but above 7 lakh rupees, it is 20%. So for instance, if you send 100 rupees overseas, the authorized dealers, the bankers, have to deduct 20%. 80 gets credited into the overseas bank account or the portfolio investment. The other 20, of course, it's reported in your Form 26AS, TIS, AIS, but you can adjust this 20 when you pay your regular income taxes. So very important to note, if you want 100 to be credited, then you have to work backwards and send a little over 100 and account for this TCS. So these are the provisions. The provision of TCS is not new. It was there earlier also, not many years back, but earlier also. But effective 1st October 2023, it's gone up for regular money sent overseas other than education, etc. It's gone up to 20% from 5%, which is why a lot of people, first said, let's send our limits for the year in June, because earlier the date was 1st July. And then a lot of people said, okay, my annual limit, I want to send out before October so that the reduced rate of TCS, which was 5%, should apply. So that's what the TCS norms and rules are. Back to you, Deepa.
Gives a lot of clarity, and we did see many of our clients leveraging the regulation before it changed in October. We saw some clients, using that earlier transactions and getting the tax benefit. Coming back to, should be some of our clients, they want to leverage the global markets when it comes to investments, right? And they want to use LRS as a mode, because if you want to say invest in a Microsoft or invest in some companies which are not available in India. And also the CAGR return of, say, Nasdaq Composite Index has given 15.45% returns in the last 10 years, right? So it's much higher than the Indian Sensex in the last 10 years. So how do you leverage the LRS route and do investments outside India? Is there
So
any
the
guidelines that they should follow?
So Deepa, very interesting question. So the first thing is, can LRS be used to make these portfolio investments? Why do I keep saying the word portfolio investments? Now, LRS can be used up till $250,000 to make investments in, say, shares, etc. Of course, if you want to buy companies, full companies overseas, then you have to do something called ODI, OPI, which is a different ball game and has its own norms. But for regular investments, so for example, if they want to buy Microsoft or Apple or Nvidia now or Tesla, then and it'll be just micro percentages that individuals will be buying in their own capacity, then yes, of course, LRS can be used. And the mechanics could be that you could send it into an overseas bank, your branch in Singapore or UK, wherever you have your HSBC branch, and you can invest through there. So that's how I have also done it. So that's so legally and practically that's how it's done. The only thing that I would want people to know here is that earlier when you sent money overseas on LRS, and even if you kept it in a bank account, because a lot of people would just send it and say, hey, I'm not getting that much interest overseas, but because the dollar movement is happening, you end up making gains And Deepa, you and I talked about it just because of the rate arbitrage. But as of August of 2022, the guidelines, and these came out as ODI guidelines. But what the interpretation of these guidelines was that if you've just sent money for, using LRS, and you've kept it into a bank account overseas, or even an FD for that matter, if you don't utilize that money for investments allowed under LRS, you have to bring it back within 6 months of sending. So if I send it and I keep it in a bank account, I've got to bring it back within 6 months or at the end of 6 months. But if you keep it in a bank account for 5 months because you don't know where to invest, and after 5 months you either put it in real estate or put it in money markets, etc., that's also allowed. So this is just a tip for all of you. If you've got money lying overseas, which you've said, oh my God, I've forgotten, it was sent a year ago, then actually it should have been brought back into the country within 6 months or invested overseas. So if there is anything that needs to be done or any action you need to take at the moment for this, please do so. Back to you, Deepa.
Thank you. So, be a follow-up question on that. If suppose I have done investments outside India and I have earned dividends or appreciation of this value of those stocks, is the tax? What is the taxation on the income earned from these investments if I get it back to India?
So again, taxation, again, very interesting concept. India has a rule where every person, citizen or non-citizen of India, is taxed according to their residential status. So it's very much like the UK laws. As per residential status, and there are lots of day counts that happen, 60 days, 182 days, etc. You are either a resident or a not ordinary resident or a non-resident of India. Now, I understand that most of our audience here today, Deepa, are residents, people who've always been in India, or people who would have gone for a little while and come back and are staying back. So I would still call them in the resident category. Now, as a global resident, um, and again, I'm assuming that all of you the last 7 years, etc., your global income is taxable in India. And you also have to report all your overseas investments in your tax return under the FA asset disclosure schedule. So any dividends that you earn from these stocks, etc., that you earn overseas have to be taxed in India. Any interest has to be taxed. If you make any capital gains, you have to offer it to tax in India, and these are taxed as per Indian tax rules. So you cannot say, oh, this was not taxed in the US, etc., because we tax in India as per Indian tax rules. So your dividends need to be taxed, interest needs to be taxed, all the accretions need to be taxed. And technically, even if they've been reinvested, technically, because the reinvestment happens at your behest, you should tax them, because in India, the rule is that income from other sources, you tax either at accrual or receipt, and you make that choice once in the beginning whenever you become a taxpayer, and then you follow that regime for all dividends, etc. So that's the rule that works. So all of you who've had overseas income and you have not reported it, please go back to your CAs. If you have not reported your Singapore and other bank accounts in your FA disclosure schedule, please make sure that it is done. If you have any demat or other accounts or brokerage accounts because you've invested, you need to report those and the maximum balance during the year, etc. Even if there's a nil balance, you should mention these in the FA disclosure schedule. So Deepa, sorry, I wanted to add the disclosure because a lot of people say, I had an old bank account, the balance is nil, I've brought all the money back, or $10 is there, so I've forgotten to report it. But our laws are very stringent. Non-reporting becomes issues under black money, etc. So very, very important to take stock of both the taxation and the reporting. And if you've paid tax in the US, technically, you may have different situations. US should not tax you unless you have a US, you become taxable there. But if they've deducted, say, 25%. If it's qualified or non-qualified, then you anyway get a tax credit for the amount of taxes that you've paid overseas. So there will not be any double tax either.
Got it. Surbhi, there are many clients who are asking what is the TCS provision in case of usage of international credit cards or debit cards within and outside India? So, is there anything that they should be aware of?
So very, and Deepa, you and I have been discussing this in the context of a lot of client queries. So, historically, and this was always used, this also always used to be a point of confusion. A lot of clients used to say, credit card pay, is it part of LRS? Is debit card a part of LRS? So debit cards were always a part of LRS. There was never any doubt. I think even as bankers or advisors, we were very clear. Debit cards and any foreign exchange bought, or any, when you go overseas and you spend it on your debit card, that's always part of LRS. Anything that is part of LRS, automatically you get a TCS provision. Of course, TCS changes, whether it's education, whether it's the rate changes, as I said, whether it's an overseas tour provider, education, or normal just sending for investments, but it becomes a part of LRS, therefore becomes a part of TCS. Credit cards, very interestingly, in I think May or June of 2023, the government issued a press release saying that international credit cards will also become a part of LRS. That means any spend that you do on international credit cards is considered as a part of your LRS limit of $250,000. And at that time, when and in the news, it came out that this was being done to bring about parity between credit cards and debit cards and remove that confusion. However, I think a few months later, the government said that the position pre-May stands, and credit cards are right now not a part of the LRS regime. And I guess the reason for that was that a lot of machinery in terms of bank machinery and reporting, etc., needed to be upped. So as of now, the position is that international credit cards are not a part of LRS, and therefore, if it's not a part of LRS, there's no TCS. So if you spend money on your international credit card overseas, as of now, it is not a part of this LRS, so no TCS. Debit cards always were. But the other gray point, and I'm sorry for being a typical consultant and saying buts, putting in a lot of ifs and buts, but that's our job here, or our the purpose here is to try and remove some confusions and keep you more updated. If you use your international credit card sitting here and buy something in forex on an international website, so I use my Amex Platinum card and I buy something on a international website for $5,000, that $5,000 is a part of my LRS limit. And so let's not say the example of 5,000, because 7 lakh rupees is exempt. So let's assume that I spent $15,000, then that $15,000 is a part of my LRS. And because it's more than 7 lakh rupees, TCS will apply. So nil TCS up till 7 lakhs, and beyond the $15,000 converted into INR and 7 lakhs, there will be a TCS as well. So whenever you're using your international credit cards in India, there is, as of now, the position is that they are part of LRS and TCS should apply. It's a gray area for sure. So whenever you do it, please reach out to your bankers or us at that point in time also, because this is the view right now. It's gray. Tomorrow, as we get more clarity, and as we, as more progress happens on these legislations, maybe, we do have a different or more updated view. So this is what the view is as of now.
Yes, I think you touched on the credit card and debit card query quite clearly. And you did mention about foreign websites. Now, all of us are global citizens. We want to buy, international products, and we do, use foreign websites to buy some products like a bag or buy some magazines, etc. And also, we sometimes use forex cards for our international travels. Are they covered in LRS limits?
Always were. So the same answer I gave for debit cards, same answer stays. Forex cards were always included, and there's no doubt on that. The advertisement for forex cards from banks cannot say it's not part of LRS. I think the advertisement has changed to say it helps to stabilize your for exchange rate. So between debit cards and forex cards, no change in the LRS treatment or the TCS treatment. The only change, and you would know that better from a banker perspective, Deepa, is that the exchange rate on which you pay is, I think, stable in forex cards and not so much in debit cards as such. And you mentioned bags. I'm sure all the ladies here are very happy to hear you, Deepa, especially on a Friday evening. And I'm hoping that all the gentlemen here are also very chivalrous, and no matter whether it's TCS or LRS, they continue to do the shopping. And of course, all the chivalrous ladies as well, vice versa. This I'm all for women empowerment.
Thank you, and I hope all of us get those bags. Uh, there are many parents who are writing to me, Surbhi, that they have their kids studying, gone for overseas education. First question is that when does their child become a non-resident? And second is that when they send the money for the expenses for the study and for the fees of their education, what is the taxation? While you did cover it briefly in the start, but if you could cover from the parents' perspective.
Sure. So, like I said, the tax rules in India, they don't change whether a person goes for education or etc. There's no explicit, sort of rule that if you're going for education, your number of days are X, Y. Residency depends on the number of days you've spent in India in a particular fiscal year, April to March. Typically, if you go out of India for more than 182 days and you're going for the purpose of education, we can take a view that in the year of going also you're a non-resident, and in the middle years also there is a 60-day rule and a 182-day rule. So in short, and I'm sure children don't get that much leave, for anyone who's been in India for less than 60 days, very clear you are a non-resident. So if your children have gone and come for just few holidays, if they're less than 60 days in India, clear non-residents. If they are between 60 and 120 and 182 days, and since they are students, I would say between 60 and 182 days, we can still take a view that they are non-residents, because there are positions to say they've come on a visit to India, etc. Very complicated to try and look at everyone's specific, but do remember this 60-day and 182 days. Just to say that Surbi said something about 60 and 182. If your children are less than 60 days in India in any particular fiscal year, clearly non-residents. If they are between the 60 and 182, and I call it 182 because you use the 182-day limit for people whose income is less than 15 lakhs, and since they are students. But if they are between 60 and 182 days, very important to, sort of go to your CA or come back to one of us and say, hey, this is the day count. Can I take any positions? And are they like valid positions which are allowed under the law? And can they become non-residents of India? So that's the first part. That's the important part. And we'll come to the part and to why people want to know whether it's resident or non-resident. I think, Deepa, you told me you'd want me to answer that question. But for parents, please, I want to also reiterate what is the LRS and TCS provisions. Dear parents, any money you send overseas for education comes under LRS. Okay. If you send it from your limit, then it goes from the 250,000 as your limit, husband and wife. If the child already has a corpus in India of their own, for example, in their own bank account through gifts that they got when they were residents, the money goes from the child's account to his own account, then it is counted in the child, whether he's a minor or a major, into his LRS limits. So if I send it for my son overseas, then it comes under my LRS limit. If my husband sends it for son too, it comes under my husband's 250,000. If my children already had their corpuses in India, then it goes from their 250 and 250 limit. The TCS requirements are very clear. If you have taken a loan to finance the education, there is no TCS up till 7 lakh rupees, and above 7 lakh rupees, it's 0.5%. I want to be very clear because the rates are very different. Education financed by a loan, no TCS till 7 lakhs. 0.5% above 7 lakhs is the TCS. If education is not financed by a loan, again, no TCS for LRS for amounts sent up to 7 lakh rupees. And above 7 lakh rupees, it's 5%. So between the loan taken for education and not loan taken, the difference in the TCS rates is 0.5% and 5%. Deepa, I hope I've answered your question, but I would want
Yes.
parents do come back for clear determination of residential status. Whoever you go to, please do have this determined, because not only this, sometimes your children end up doing internships, etc., especially if they've gone to the States. It's still the most popular. And then they may need to file tax returns in India if they are residents of India, and they may need to report their foreign bank accounts, etc. So very important to anyway know the residential status, to make sure that they are compliant from a tax perspective from the first year of their earning life as well.
Yeah, thank you. Thank you. I think this really clarifies, and especially on the loan and without the loan, there is a difference. And thank you for clarifying that, because we see a lot of parents, self-funding the loan, the education expense, versus some people who do buy, do take a loan and then send their kids abroad. There are also many employees who have joined this webinar, Surbhi, and they are asking that how does TCS provisions apply on the stock incentive plan, if they have any?
Deepa, very, very complex and interesting question. So, first of all, in India, we generally, whenever we have long-term incentive plans, I've seen that a lot of people just call them stock option plans. There are several types of incentive plans. There's a stock option plan, there's a restricted stock unit plan, and then there's an employee stock purchase plan. Now, and this issue of LRS or foreign TCS only comes in if you've gotten a stock incentive plan of a foreign entity. If the stock incentive plan is of an Indian entity, then there is no question of money going outside. When there is no question of money going outside, there's no LRS and there is no TCS. So let me first say, if you've got stock options or incentives of an Indian entity, this is it's taxation is a issue. I mean, you can please feel free to ask me questions on that, but that doesn't come under the LRS issue. Let's assume that you have stock options of a foreign entity, and you've got it because you are an employee of the subsidiary of the Indian entity. Very common. Maybe it's a GE, maybe it's a Microsoft, maybe lots of such companies. Now, if you have an ESOP, which is where you are granted options, you exercise the options, then you become shareholders, or you get a share. Unless any money is going outside, for example, unless you are sending the money for the exercise overseas, there will be no implications on LRS or TCS. Now, you will ask me, but why should we not send the money overseas, Surbi? How will we pay our exercise price? Very often, multinational companies don't ask you to pay a exercise price, because they sort of do a cashless exercise and also do something called a sell to cover. So two different concepts, but you may not be remitting any money overseas because it's something called cashless, and then they do an adjustment. So if you are under those plans, where there is a cashless exercise, and you're not really remitting any money outside, these LRS provisions should not impact you, because there's no money technically that's going outside. Again, there are two views on this. How is it cashless, how not? But it's very, very case specific, and we are working with companies on this. But one type of plan where there will always be money going outside is called an employee stock purchase plan. And we've worked with a lot of companies, US multinationals, when they asked us this. Now, what happens in an employee stock purchase plan is, one every month, typically, say company X gives you 5 shares. They say the 5 shares are worth 500. We will pay, you pay 85% on your own, and 15% the company will pay. Now, in that case, you do send money overseas, or that money may be cut from your payroll or sent overseas, etc. In this case, yes, TCS should apply and will apply, because the money is being remitted overseas in one way or the other. So TCS should apply. What companies have to do, the TCS is always deducted by, of course, the AD bankers, etc. But how your question would be, how will the companies know whether my whether I've sent 7 lakh rupees or more? For example, if my purchase plan is only 50,000, how will they deduct it? Because still 7 lakh rupees is exempt, right? So then the companies take a declaration from the employees and say, in the employee stock purchase plan plus any other LRS that you've done, is it 7 lakh rupees or more? And if it is, then the TCS is then deducted. So all of you who are under such plans where there is a not a cashless exercise, especially I'm telling you where there would be an ESPP, you would have been asked for such a declaration and you would see that there is a TCS impact, and that is the right thing to do. So for more details around this, please feel free to contact me or Deepa. But ESOP or long-term incentive plans also come under LRS in these circumstances. Deepa, I hope
Yeah.
I was clear. It's a very,
Yes,
very complex topic, and I don't want
it
people to
is.
scratch their heads and say she's confused us.
It is complex, and I would request everyone, while Surbi is, a qualified partner with EY on taxation, but everyone's circumstances are different. So I would request you that while you understand the LRS regulations on this webinar, but for your personal guidance, we would request you to please reach out to your chartered accountants. And for HSBC Premier clients, we do have a 1 hour complimentary session with EY. So if you want to have your personal query discussions, please reach out to your RM and we will involve Surbi and her team for your queries. There are a lot of questions being asked around HSBC International Credit Card. If we spend in India, is it still counted as LRS? So this answer even I can give. While the credit card of HSBC is the international credit card, but any spends done in India from your India HSBC international credit card, it does not qualify as LRS. It's only spends outside India. Could we please correct me if I am
So I'll just,
addressing
Deepa,
correctly?
just to add to it, if you
Yeah.
do, so if you use the international credit card and you buy stuff in INR from Amazon India, Myntra, Blinkit, Zomato, we do a lot of Zomato, and I must say Swiggy also. Don't want to get into trouble, but all of that has not is not LRS, an international credit card, but the spend is in INR. Only if you use the international credit card on overseas websites and then spend it in dollars, that will come under LRS. So that's the example Deepa gave on the bags, where you said you go on, or you probably go on a Louis Vuitton website and buy something, or a Celine website and buy something in US dollars and others, then that counts as LRS. So don't worry about any INR spends. If you use the credit card physically overseas, so you go to Australia and others, or US, Singapore for trips, and you physically spend, right now the view is that that is also not LRS, because remember I spoke right in the beginning that while it was being brought into the whole ambit of LRS, then that press release was then kept on hold, and therefore as of today, when you go overseas and you physically go to a store and buy anything from your international credit card, that doesn't come under LRS. It's again evolving, and and so keep in touch with us, because the intention was there. Maybe the authorities are waiting to when the machinery of the banks becomes so robust that they can sort of monitor these transactions. So one day it may become, may or may not, but as of now it's not. So Deepa just wanted to be very clear about these three categories, because these are often questions that people keep
Yes.
asking. Debit card, credit card, spent outside, spent in India on international websites, spent in India on INR websites. So these are the five categories, ladies and gentlemen, boys and girls. So just be very, very clear about.
Yes, absolutely, Surbi. The next question is on, yes, of course, the credit card questions are, coming again and again. So any spend, as Surbi said, any spend on credit card currently is not in the ambit of LRS, but this is an evolving topic. And at this point of time, this information is accurate, but the regulations may change any moment. So you please keep yourself updated, or you can reach out to HSBC relationship managers and they will guide you from time to time when the regulations change for banks. Sudhi, there is a question on so there are a lot of employees who have joined from multinational companies, and their companies do give them an option to buy stocks of the holding company who is overseas, right? And it's like an SIP. Every month from their salary, the money gets deducted, and they get to buy the shares of a holding company, which is, say, for example, in UK. So is this part of LRS, and what should they take care of? Because they do get dividends also from these company shares, and every month the salary gets deducted.
So, the Deepa, remember just a few minutes back, I had talked about the employee stock purchase plan. Your question is exactly this. This is the SIP that you call is actually the employee stock purchase plan. So if I was, so it means that every month I can get, say, one share of a company. I'm just giving a hypothetical example, and I get a discount. So I don't have to buy it at market price. I get it at a discount to market price. So one, I pay tax on the discount, and I remit the proceeds overseas, or they are remitted overseas. So yes, in this case, it is definitely under LRS, because this is actually when you are remitting funds overseas to buy the stock of the overseas company through this SIP, which is not really an SIP, it's called an employee stock purchase plan. And all of you who are part of this would be very familiar with this word. It is then kept in a brokerage account overseas. It could be a UBS account or anything, and then you would also earn dividends. So very clearly, it is part of LRS, and therefore there is also going to be TCS. Your employer is going to ask you, typically should ask you, hey, have you done any other LRS? Because the LRS amount is exempt if there is only 7 lakh rupees of remittance. So if your ESPP, or this SIP as Deepa called it, has already exceeded 7 lakhs, they are going to anyway, there's going to be information exchange with the AD bankers, etc., by the employer, and there will be TCS. If your ESPP is less than 7 lakhs, they're going to ask you, please give a declaration that your total LRS, which is your purchases, your education, your spends overseas, your tickets, etc., are not over 7 lakhs. And if you say yes, it's over 7 lakhs, then again the TCS will apply. So be very careful that when you have that TCS deducted, you are not shocked and surprised. Two, look at your Form 26AS and take a credit of that TCS when you're filing your taxes. Remember, you can adjust it from your final taxes. It's not a money that's just gone. So you can adjust it, and it gets knocked off from your regular income tax. Three, if you have this money, if your shares are kept in a brokerage account overseas, report the brokerage account in your tax returns if you're residents. If there are dividends, those dividends are taxable in India and also need to be reported. There are also rules regarding any repatriation of dividends and other income back to India. There are specific rules around that. You must also discuss those rules and repatriation with your chartered accountants, because there are different rules depending on how, if the money went through LRS or other ways as well. So these are the 4 or 5 things you need to be very, very clear about.
So there is one question on how do banks or entities know that my 7 lakh limit has got passed and now the TCS needs to be
So
deducted.
entities,
So
yeah, entities like your employer, like I said, will take a declaration from you. And how do I know that? Is because most multinationals have reached out to advisors to ask, hey, is there TCS on ESPP? And we have said, yes, there is. That's our view. And said then, and it is most advisors, whether it's Big Four or others, have suggested that you take a declaration. So if the declaration is being asked for, it is some advisor has told them to ask for it, because they also have to mitigate their risks. So that is how they will know. And you are supposed to sign and file the declaration and be accountable for it. So that's how companies know. Banks, so, and Deepa, you would
I
be
can,
able to
yeah,
say,
I
yeah.
can
So when I
answer that.
sent money, through HSBC also, and I sent more than 7 lakh rupees. Please, nobody come after me. It's all tax paid money. They automatically deducted the TCS, because their machinery is able to, and through their ERP systems, they are just like they deduct TDS on interest, etc. Right? So that is also a machinery. Banks have that machinery and are required under their RBI norms to have that machinery. So that's how
Yes.
banks will know. Deepa,
So
you want to add to
LRS,
that?
Yes, so LRS limits are linked to your PAN card. So,
Yes.
anyone who doesn't have a PAN card cannot do LRS. So, basis the PAN card, there is a central repository from where the banks come to know how much you've sent. And that's why beyond $250,000, it won't go through in the same financial year. So, I hope it's clear. And, banks, entities, everyone will either take a declaration or they will know that your limit is crossed and what TCS taxation limit that you are currently on, and we will charge you accordingly. Again, there are questions on buying holiday tickets through a foreign. Questions are that if they buy a foreign holiday through an Indian company like Make My Trip, vis-a-vis if they directly book holidays through a Airbnb outside India, does Make My Trip include LRS and the Airbnb direct booking include in LRS? That is the question theme, Surbi.
Okay, so there is and so there is a separate LRS limit on overseas tour packages. People should know this because the 7 lakh rupee exemption that I've been harping about, no TCS till 7 lakhs, no TCS till 7 lakhs. That does not apply to overseas tour programs and packages. So for overseas tour program and packages, there is 5% TCS till 7 lakh rupees and then 20% above seven. So there is no 7 lakh exemption. What are these overseas tours and packages? So like you go to these vendors and you buy these trips where you pay a consolidated amount, which has the ticket, which has the hotel, which has your tourist buses, etc. On those there is definitely a TCS, and they are part of LRS, and then there is definitely a TCS. There is 5% till 7 lakhs and 20% over 7 lakhs. Now, second question, Surbi, I will not take an overseas tour package. I will directly buy through my foreign exchange a ticket. That's also under LRS. Then you'll ask me, then what's the difference? I'm still having to pay TCS. But remember, there is an exemption of 7 lakh rupees. So if I buy a ticket for myself and my husband, and through an overseas chat, like I spend forex, but the ticket is less than 7 lakh rupees, and that's my only LRS during the year, then there is zero TCS because I haven't breached the 7 lakh rupee limit. But if I buy a overseas tour package for 7 lakh rupees also, because it's under the overseas tour package, there is still a 5% TCS. So be a little bit careful about whether you're buying these as consolidated or separate. Both may well come under LRS, but the TCS norms are very different. Again, TCS is not lost money. You can adjust it at the end, but you should know so that because that 5% can be an extra cash flow to you for that moment.
Okay. Sylvie, now there is some question on real estate. People are interested in real estate, and as per the data, real estate and direct stocks are the top two reasons why Indians send money outside India. So, if an Indian resident wants to buy, say, a property in Australia or in UAE, can they take a loan from a bank in UAE or Australia and buy a property there?
First question, as a resident of India, under our RBI or our FEMA rules, you are not allowed to take a mortgage from an overseas bank. If anybody tells you that to the contrary, I would suggest that you do check with us and your AD bankers, which is HSBC. But loans are not allowed. As residents of India, you can't take mortgage or loan outside of India. There is a view that that mortgage or loan could be part of your LRS, and then there's a view that it's not allowed at all. So please do consult and come back to us on this one. But don't go and sign any papers and just take a huge loan and say that's kosher. That's not allowed. Can you use LRS to buy real estate? I think, Deepa, that would be the logical next question in the minds of all our viewers. Yes, you can use LRS to buy real estate. And Deepa, I don't want to again confuse everyone, but you've chosen a very complex topic. I'd want all of you to be very careful when I just talk about the next set of rules. Earlier, it was said that if I use the LRS limit for myself, my husband, and my two children, they're no longer minors, but supposing for me, my husband, and my two children, I could remit, or four of us could remit $1 million in the fiscal year, 2015 to 4, and buy real estate overseas. But it was earlier, the norms were that if you are using the LRS limits of four people, and you're buying a house in Australia, then you should have the name of all the four people whose LRS has been used in the same proportion. So if I've used 250, 250, 250, 250 for all four names should be registered on that property. However, recently there's been some amendments in the rules, which was I think also in 2022 or later, which said that this clubbing, that clubbing may be allowed. And we, so that means that if somebody had minor children and they have used the LRS limits of the husband, wife, and the minor children, or I have used the LRS limits for myself and my two minor children, then I could still just put the property in my name. This there was a change. There was some fine print that had changed. We understand that that is also the view right now, that if that earlier, if I sent 750, which was Surabhi, say child one and child two, it had to be in the name of the three people. But if I do it now, it could just, the property, say in Dubai, let's take the example of Dubai, could only be in Surabhi's name. There is this view that is there. Again, because of the fine print very clearly. But some AD bankers, and HSBC will of course tell you their view, but some ADs bankers are saying no, there isn't that much clarity, so it should still be in the names of three people. But the fine print clearly says that the clubbing can be allowed. So if any of you are doing real estate and you don't want the property to be in the name of your minor children or your children, even though you've used the LRS limits, there could be a way out. Had you asked me this 3 years ago, that Surbi, I want to use the LRS limits of my children, but I don't want to put their names, I would have said, sorry, that's not allowed under law. But this could be because of the fine print. This could be something that you need to evaluate and check with your advisors on. So very important question, whoever asked this, Deepa. And I don't want to confuse you, but if you're doing this real estate, first, you can do it under LRS, no problem at all. Remember the TCS. And two, do remember, just check with your advisors and bankers as to whether you need to have the names of all the people whose limits are used or just one or two people. Okay.
Understood. Surbhi, there are many parents who send their kids to US, and there is this EB-5 visa type that we all know about for investments in US. So does EB-5 investment also be considered as a part of LRS, or there are specific RBI approvals that they need to take
No, no.
for
So
EB-5?
the money that you send for EB-5 will always also be a part of LRS only. Some the questions, and I'm premeditating this question, is some of the questions we are sometimes asked is, can we send the money into one bank account, or do we have to send the money into four different bank accounts? And I think that is also something that, the rules keep evolving, and it's good to check with your relationship manager in HSBC at that point in time on that as well. But otherwise, it is part of your LRS limits.
So there are questions on LRS limits itself, like, if I don't keep record of my annual transactions, is there a way I can come to know how much have I sent? And secondly, if I cross $250,000, what do I do?
So first question is, see, money in under LRS, and we are all talking here in for HSBC customers, will be sent through normal banking channels. And I'm assuming all of you are HSBC customers. So HSBC anyway has a record. So if you look at your so for example, if you've sent it to Singapore, and I'm giving my practical example, you've sent money in different tranches. If you go to your app and you look at the HSBC app, you will be able to see what money went and at what rates. And your Form 26AS will also give you the TCS deducted. So there is no question that you will not have it. It's a click of a button. Your second question, can I exceed the 250? In my view, and Deepa, maybe you can add to it, I think when you exceed 250 and because it's linked with your PAN, so you may say, oh, I've done 200 with Kotak, 50 with HSBC, maybe I'll try another 200 with HSBC, but it's not linked to bank. Remember, it's linked to your PAN. It's like every transaction is linked to your PAN, every TDS is deducted. So for all of you who've been here, if you open your Form 26 years, Anybody who has paid you anything and has deducted TDS, any bank, anyone, anybody paying rent, everything is there for everyone to see. So similarly, your TDS is, your LRS is linked to your PAN, and I think for every banker they also track through PAN and have their own sort of compliance checks in place to see that more than 250 doesn't go, because they get that information from the back end through the PAN. Deepa, if you can also give more examples on how you
Yes, absolutely. Absolutely, you're right. So, maybe before some years, it could have been possible there is a miss out. But now all the banks are interlinked, and as long as you use your PAN card number and the same is shared across all banks, it will never happen that you will cross the $250,000. But for your records, you can reach out to your relationship manager, and they can also tell you, basis your PAN card, they can run a query and tell you that what is the outstanding limit for the year, which you can still utilize and leverage on. Uh, the next question is on these, so we all of us do now want to take international insurance policies also, because sometimes, some, reason, and we may have to go outside India for some medical treatment for your parents or for your spouse, etc. So if you buy a global insurance policy, the premium paid for these global insurance policy also, will it be part of LRS? And if yes, what taxation or TCS will it apply?
So, typically when you buy insurance policies when you're traveling, which is the travel policies, those travel policies are bought in India and they are bought out from your INR amount. So those should not come under LRS. If you're talking about things like there are products called PPLI, there are other life and other policies. Again, that depends upon whether, and there are rules, and Deepa, it's a very sensitive question because there are FEMA restrictions and FEMA rules and compliance procedures that apply for residents to buy insurance products, investment linked and other products overseas. So typically, whatever insurance is being bought will be bought for travel or will be bought for medical reasons and will be bought through an Indian vendor and in INR. So those don't come under your LRS limits. For anyone who's looking to buy products or investment products which are insurance based, etc., it is very important to check if you are even allowed to do so under the FEMA regulations, and then only the issue of LRS will come in. But I think the question more was travel and medical when people go overseas.
Medical.
Yeah. So those are anyway INR and should not come under LRS in my view.
Understood. Understood. So I think it's similar to what in the international credit card. So if you buy your insurance policy from an Indian bank or an Indian company for a global insurance medical cover, then there is no LRS. But if you're buying something from a international company, then you definitely need to take care of and consult your chartered accountant or your tax consultant before doing those transactions and filing
Absolutely.
taxes. But Surbhi, you did cover on the TCS, but we are getting a lot of questions on the chat on the taxation on TCS. So when you're filing your year-end taxes, what TCS can we claim back? And again, those questions, if you
So,
can please
so
highlight
let
them.
me be, so when you are filing your taxes or your CA is doing it for you, the person will look at your Form 26 AS, AIS, and TIS. The Form 26 AS gives you details about any income paid to you and any taxes deducted or any taxes paid by you, whether that's through purchase of property, rentals, etc., anything. So when you are filing your tax return, and mostly tax returns can be pre-filled in. Everything gets linked to from the tax return form to the Form 26 AS. Now let's assume after everything you file your tax return. Example: total tax liability for Surabhi is 100. TDS already deducted is 90 because salary pe TDS hai, then there's TDS on other things. So let's assume 100 is my is my total tax. 90 is already deducted as TDS. So remaining is 10. Let's assume Surabhi did, and I'm taking my own example. I did LRS and there was a TCS deducted of 100 by the banker, which is by HSBC. Then it will be 100 minus TDS 90 minus TCS 10. So I don't have to pay any more taxes. So TCS will be adjusted from my regular tax when I'm filing my tax return. So it is like I kept saying, it is just a timing issue. It's not a loss of money. So I'll be honest, I had done LRS and I forgot about the TCS. And I opened my Form 26AS to do my advanced taxes this December. And as a CA, I must do my own advanced taxes. And I was just about to click and pay. I said, oh, I did LRS. And I looked at my Form 26AS and there was TCS. And I very happily adjusted it. And my advanced taxes were lesser than because of that. So for me, it was just a timing issue and not a actual loss.
Understood. And this gives quite respect to everyone because people
Yes.
take it as an expense. So it is not an expense. It is just that
Not a
like an advance tax, and then you can at the time of filing your returns, you can claim it back. Last questions would be because there are more than questions that I can take in an hour. But
You can,
last
I'm
question
sure you
is,
can send me
yeah,
some. You can
I
send
will,
us
I
some
will,
email. Ammu and I
I
will
will.
be happy to address them.
I will. Last question, Surbi, is that the $250,000 limit that we have, does that include TCS or excludes TCS?
So
So is
actually,
TCS above that or it's part
no,
of
it's
250,000?
not above that. And Deepa, maybe you can add how it goes is that the TCS, so if you, the 250, in my view, when you send it, the 250 includes the amount of TCS that's deducted. So if you want to send 100 rupees to someone, like to my, if I want to send education fees of 200 and I want 100 to go to the college, I have to send more than 100. I have to gross it up so that the TCS of 5% is accounted for. So in what I understand is that the 250 includes the TCS because the bankers will look at the gross amount to
Yes,
link to your PAN and not the net amount. And that's my view. And I think that's how the bankers also look at the
yes.
machinery, that the gross amount sent is 250 and you can't take the 20% and say, now I want to send 20% more.
Yeah, absolutely. You're right, and that is what the right answer. With this, we will just take one more minute because so many of my clients are also asking that, how do we leverage HSBC's platform and do our LRS? So there's one slide that I'm going to just put up, and this is for your reference. You can send your LRS limits, you can use your LRS limits and do your transactions via HSBC India's mobile banking app under the Global Money platform. This is a convenient platform, fast, fee-free for all your international payments. Very simple seven-step process. You can log in on your app, go to Move Money, select an international payee or add an existing payee or for your global money, send the money internationally, select the country, the territory, and from account, enter the amount that you want to send, click on continue and confirm, hit. Put the purpose of payment, which is very important, capture the remarks for the beneficiary reference, agree on the FEMA declaration page, and then review your payment details and your transaction goes through. It's real time, fee free, and very, very simple. So, with this, I come to the end of today's session. I would like to thank Surbi for her time and making decoding LRS compliance and regulatory requirements for us. Thank you, Surbi, for sharing your valuable insights and expertise. We really appreciate you taking time out to address these questions and queries. To our valued customers, thank you for joining us today. We hope this session has equipped you with the knowledge and confidence to navigate LRS effectively. Anyone who wants to see a repeat telecast of this program, we will be available on HSBC India YouTube page. The session will be available for you to see it in the later dates also. We encourage you to connect with your dedicated relationship managers for any further queries. We will get you in touch with your EY expert and get your queries resolved. Thank you and have a great weekend.
Thank you. Thank you, Deepa. Thank you, everyone.